Is real estate still the golden ticket in 2025, or are the days of easy profits behind us? With rising interest rates, economic uncertainty, and evolving market dynamics, many investors are wondering, is it still smart to invest in real estate this year? Or is it time to look elsewhere? The answer is more nuanced than a simple yes or no. In this video, we'll unpack what's really happening in the real estate market, explore the current risks and rewards, and help you decide if 2025 is the year to make your move or to stay on the sidelines. The 2025 real estate landscape. In 2025, real estate doesn't look like it did 5 years ago. The market has shifted from the pandemic-fueled buying frenzy of the early 2020s into a more cautious, strategically paced environment. With interest rates still significantly higher than pre-2020 levels, buyers are more selective, sellers are slower to lower prices, and investors are analyzing every move with surgical precision. This cooling off isn't a crash, it's a correction. The days of double-digit appreciation overnight are gone. What we're seeing now is a return to fundamentals: location, cash flow, value-add potential, and long-term stability. If you're not in this for the long haul, the short-term volatility might feel like a storm. But for patient investors, this environment can be fertile ground. Interest rates, the elephant in every room. The biggest weight pressing down on the real estate market in 2025 is undoubtedly interest rates. After aggressive hikes in 2022 and 2023 to combat inflation, central banks have settled into a high-rate posture, and while we've seen marginal decreases, they remain well above the ultra-low levels investors grew accustomed to. This has made financing more expensive and has cooled demand across the board. First-time buyers are often priced out, and seasoned investors must now consider higher carrying costs and lower margins. Still, higher rates are also creating opportunity, especially in regions where prices have adjusted downward to meet softer demand. Savvy investors are negotiating harder, buying below market value, and leveraging creative financing methods to secure deals. While high rates are a hurdle, they're not a wall, they just require a different kind of strategy. Urban exodus and suburban renaissance. The population shift that began during the pandemic hasn't slowed in 2025. Instead, it's evolved. Major urban centers are no longer the automatic hotspots for investors. People are increasingly favoring suburban neighborhoods and smaller regional cities that offer a better quality of life, remote work flexibility, and most importantly, affordability. This shift has rebalanced demand across the country. Suburbs once considered sleepy are now experiencing infrastructure investments, new developments, and an influx of families and professionals. For investors, these locations offer lower entry prices and the potential for solid appreciation as they continue to grow. The challenge is identifying which suburban areas have long-term legs and which are simply benefiting from temporary hype. Inflation and the new cost of building. Inflation remains a persistent undercurrent in the 2025 real estate market. While it has cooled from its 2022 peaks, the cost of labor, materials, and land has not returned to pre-pandemic levels. Developers face higher construction costs, which means fewer new builds and more competition for existing inventory. This has created a dynamic where well-maintained older properties, especially those with modern updates, are in high demand. Investors looking to renovate and resell are facing slimmer margins, but can still find profitable flips with careful budgeting and smart purchasing. Inflation has also reinforced the age-old principle that real estate is one of the best hedges against a declining dollar. Tangible assets like property tend to hold their value or increase as the cost of living rises. Rental properties and the new tenant market. The rental market has remained resilient even as home buying has slowed. In fact, high interest rates had indirectly boosted rental demand as would-be buyers stay renters longer. Cities with strong job growth, universities, and limited housing supply are seeing rising rents and low vacancy rates. Investors in these markets are reaping the benefits of stable, and in some cases, growing cash flows. However, tenant expectations have also evolved. Renters in 2025 want modern amenities, smart home features, and eco-friendly designs. Properties that meet these expectations command premium rents and longer tenant retention. For landlords, the opportunity is clear, but the margin for error is slim. Poorly managed or outdated properties risk high turnover and negative cash flow. Tax benefits and long-term wealth building. Despite market changes, real estate continues to offer compelling tax advantages. Depreciation, mortgage interest deductions, and 1031 exchanges remain key tools for investors to minimize tax liability and grow their portfolios. For buy-and-hold investors, these benefits compound over time, creating not just income but generational wealth. Real estate's physical nature also makes it a more predictable asset in uncertain times. While stocks can swing wildly, real estate, when chosen wisely, tends to move more slowly and steadily. It's not about quick wins. It's about sustained, smart growth. Challenges every investor must face. That said, real estate is not without its downsides, especially in 2025. Property management remains a consistent challenge, particularly for out-of-state investors. Maintenance costs are higher, labor is scarcer, and regulations have become stricter in many areas. Rent control laws, tenant protection legislation, and zoning changes can dramatically impact your returns if you're not paying attention. Then there's the issue of liquidity. Unlike stocks or crypto, you can't just click a button and sell your property overnight. Real estate requires time, patience, and in many cases, a tolerance for unpredictability. In 2025, successful investors are those who understand the risks just as clearly as they see the potential rewards. Emerging opportunities in a new era. While the market may be more complex, opportunity hasn't disappeared, it's just shifted. Secondary markets, value-add properties, and mixed-use developments are attracting more attention from savvy investors. There's also growing interest in sustainable and green real estate. Homes with energy-efficient upgrades and environmentally conscious designs are becoming highly desirable, especially among younger buyers and renters. Tech integration, smart thermostats, solar panels, EV charging stations is no longer a luxury. It's the new standard. Investors who align their portfolios with these future-focused trends are better positioned for long-term success. So is real estate still worth it in 2025? Yes, but with conditions. The era of easy money and automatic passive appreciation that many investors enjoyed in the past is largely over, at least for the foreseeable future. The real estate landscape in 2025 demands a far more disciplined and strategic approach. It's no longer about simply buying a property and waiting for it to rise in value. Today, success in real estate investing requires a deep understanding of local market dynamics, economic indicators, financing conditions, and evolving consumer preferences. Investors must be prepared to do their homework, analyze data, and stay up to date with both macroeconomic shifts and neighborhood-level trends. This is not a market that rewards speculation or shortcuts. It rewards preparation, patience, and adaptability. While the barriers to entry may seem higher, so are the potential rewards for those who can navigate the complexities. If you found this deep dive helpful and want to stay ahead in the ever-changing world of real estate, make sure to hit that subscribe button. We've got more in-depth breakdowns, strategies, and insights coming your way to help you make smarter investment choices. Thanks for watching, and here's to making informed moves in 2025.